Ladies and gentlemen, good day and welcome to NHPC Limited Q2 FY25 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rupesh Sankhe from Elara Securities Private Limited. Thank you and over to you, sir.
Good afternoon, everyone. On behalf of Elara Securities, we welcome you all for the Q2 FY25 conference call of NHPC. I take this opportunity to welcome the management of NHPC, represented by Mr. R.K. Chaudhary, sir, Chairman and Managing Director, Mr. R.P. Goyal, sir, Director Finance, Mr. Uttam Lal, Director Personnel, and Mr. Sanjay Kumar Singh, Director Project. We will begin the call with a brief overview by the management, followed by Q&A session. I will now hand over the call to Mr. R.K. Chaudhary, sir, for his opening remarks. Over to you, sir.
Good afternoon, friends. The NHPC board has adopted half-yearly financial results for the period ended 30th September 24 in its meeting held on 7th November 24, and the same has already been communicated to stock exchanges. By now, I hope you all would have got chance to go through the quarterly and half-yearly set of numbers. First, I will just touch upon major highlights and then detailed analysis of the results shall be discussed by our Director Finance, Sri R.P. Goyal ji. Brief highlights of the project financial results and important updates on the company are as enumerated below. During half-year financial year 25, our power stations have achieved generation of 15,013 million units as against 16,797 million units generated in corresponding period of the previous year, which is lower by about 11% or 1,784 million units. This is mainly due to heavy flash flood in Teesta Basin in October 23, which has resulted into complete shutdown of Teesta Power Station, which has generated 1,928 million units in the corresponding previous year. The restoration works at the power station was going on, but in August 24, a landslide occurred at the power station site, affecting the tailway tunnel, outlet structure, and the GIS building. Necessary remedial actions have already been started, and the restoration works are expected to be completed by third quarter financial year 26. Our plant availability factor for half year financial year 25 stands at 82.68% against the corresponding previous period plant availability factor of 91.93%, which is about 9% lower. This is mainly due to lower water availability, complete shutdown of Teesta Power Station, and partial shutdown of TLDP-3 Power Station due to flash flood and high silt in the river, less inflow in various power stations, and outage of unit at Uri 1 Power Station. During half year financial year 25, company has earned revenue from operation of rupees 4,969 crore as against rupees 5,056 crore in the corresponding previous year, which is about 2% lower. During half year financial year 25, company has earned profit after tax of rupees 1,929 crore as against rupees 2,500 crore of corresponding previous period, which is 23% lower. On fiscal front, as we have been sharing that the active construction work at Suvansi Lower project site is going on in full swing, recently we have achieved a major milestone in the completion of the project with the successful lowering of the rotor of Unit 3, weighing 673 tons on 17th October 24. Overall, 94% physical progress of the project has been achieved. We are very hopeful that we can commission 3 units of the project by March 25 and rest of the units one by one by May 26. The revised cost of project at completion is under process. We have incurred rupees 22,027 crore till September 24. The estimated levelized tariff based on the anticipated cost is rupees 5.60 per unit. In respect of Parvati 2HE project, as we have already shared that we have achieved the daylighting of 31.5 km long headrace tunnel of the project. All the major works of the project except 159 meter overt lining and 3,630 meter invert lining of HRT have been completed. Overall, 98% physical progress of the project has been achieved. We are trying our best to complete the remaining overt lining and invert lining of HRT and commission the project by February 25. The anticipated cost of the project is rupees 12,160 crore, out of which we have already spent rupees 11,879 crore till September 24. The estimated levelized tariff based on the anticipated cost is rupees 6.73 per unit. In respect of Dibang multipurpose project, 2,880 megawatt, 5 out of 7 packages related to design and engineering, infrastructure works, construction of HRT and powerhouse, E&M works, and HM work of pressure shaft have been awarded. The remaining 2 packages related to dam and HM works are in the tendering stage. We have already shared that we have achieved a significant stride towards ensuring all-weather road access to the project site. The estimated cost of the project is rupees 31,876 crore, which includes grant of rupees 6,716 crore for flood moderation and enabling infrastructure works, out of which we have already incurred rupees 2,525 crore till September 24. Further, estimated levelized tariff of the project is rupees 4.46 per unit, and the scheduled completion of the project is February 32. In respect of Lenco Tista Hydropower Limited, Tista 6 project 500 megawatts, as we have shared that work was progressing well at site. Work for construction of new bridge is under progress for making permanent approach to powerhouse. Further concreting at barrage area and excavation of HRT is also in progress. Overall, 64% physical progress of the project has been achieved. The estimated cost of the project is rupees 5,748 crore, out of which we have already incurred expenditure of rupees 3,732 crore. till September 24. Estimated levelized tariff of the project is rupees 4.07 per unit, and expected commissioning schedule of the project is December 27. Further, we are in the process of merger of LTHPL with NHPC, and the order for the merger is pending with Ministry of Corporate Affairs. Jal Power Corporation Limited and Rangit 4 project 120 megawatts is also progressing well. On 22nd July 24, the project has successfully achieved the daylighting of the HRT. Overall, 80% physical progress of the project has been achieved. The estimated cost of the project is rupees 1,828 crore, out of which we have already incurred expenditure of rupees 1,241 crore till September 24. Further, we are in the process of merger of JPCL also with NHPC, and first motion application has been filed with Ministry of Corporate Affairs. The project is expected to be completed by December 25. In respect of Ratle HE project, Union Territory of J&K, 850 megawatts, the work is progressing well at the project site. Overall, 17% physical progress of the project has been achieved. The estimated cost of the project is rupees 5,282 crore, and we have incurred expenditure of rupees 784 crore till September 24. Estimated levelized tariff of the project is rupees 3.92 per unit, and the project is expected to be completed by December 27. Presently, NHPC through its subsidiary Chenab Valley Power Projects Limited is executing 3 projects in Chenab Basin, Union Territory of J&K. Construction work at Pakaldul HE project 1000 megawatts is progressing well. Overall, 60% physical progress of the project has been achieved. The estimated cost of the project is rupees 8,112 crore, out of which we have incurred expenditure of rupees 5,092 crore till September 24. Estimated levelized tariff of the project is rupees 4.28 per unit, and the project is expected to be completed by September 26. During half year financial year 25, company has earned PAT of rupees 1,929 crore as against rupees 500 crore of corresponding previous period, which is 23% lower. In respect of Kiru HE project, 624 megawatts, overall 45% physical progress of the project has been achieved. We have incurred expenditure of rupees 1,867 crore till September 24 out of estimated cost of rupees 4,288 crore. Estimated levelized tariff of the project is rupees 4.64 per unit, and estimated completion of the project is September 26. In respect of Kwar hydroelectric project 540 megawatts, the work is progressing at site. Overall, 17% physical progress of the project has been achieved. The estimated cost of the project is rupees 4,526 crore, out of which we have incurred expenditure of rupees 770 crore till September 24. Estimated levelized tariff of the project is rupees 4.44 per unit, and the project is scheduled to be completed by December 27. Apart from above under construction projects, NHPC is also working on some projects such as Tisa 4 520 megawatt, Sawalkot 1856 megawatt, Uri 1 Stage 2 240 megawatt, Dulhasti Stage 2 260 megawatt, Kirthai 2 930 megawatt, and Dugar project 500 megawatt, which are at different stages of clearances. In respect of our hydroelectric projects in Nepal, final detailed project report for the West Cheti hydroelectric project 800 megawatt has been submitted to the Investment Board of Nepal on 18th October 24, in line with our commitment under the Memorandum of Understanding. Further, an MOU has been signed between NHPC and Rashtriya Prasaran Grid Company Limited, Nepal, for grid connectivity for West Cheti hydroelectric project on 13th May 24. The inception report submitted by NHPC has been accepted by Investment Board of Nepal in respect of 460 megawatt West Cheti River 6 hydroelectric projects, and the DPR is under preparation. Further, review report of DPR has been submitted to Vidyut Utpadan Company Limited, Nepal, in March 24 in respect of Phuket Karnali hydroelectric project 624 megawatt in Nepal. PPAs for all under construction projects of NHPC, including its subsidiaries, have been signed or consent has been received from the DISCOMs for the same. In respect of 1000 megawatt capacity solar power projects allotted under CPSU scheme 2, the works are progressing well in respect of 300 megawatt project in Bikaner, Rajasthan. In a significant development, Ministry of Power has conveyed approval for laying transmission line for evacuation of power to be generated from the project to Bikaner 2 pooling stations, addressing execution challenges due to Great Indian Bustard GIV issue. Further, land acquisition is in progress in respect of 600 megawatt projects in Gujarat and 100 megawatt project in Andhra Pradesh. NHPC, the subsidiary of NHPC, has fully commissioned 88 megawatt floating solar power project at Omkareshwar Reservoir on 10th of October 24, with the commercial operation COD obtained on 29th of October 24. The cost of the project is rupees 589 crore and the tariff of the project is rupees 3.22 per unit. NHPC has awarded the EPC contract for 200 megawatt grid connected solar power project stage 1 located in 600 megawatt solar park at Khavda, Gujarat to Messrs. Apollo Green Energy Limited on 5th of August 24. The cost of the project is rupees 929 crore and tariff of the project is rupees 2.73 per unit. The project is expected to be commissioned by August 25. NHPC has awarded the EPC contract for 50 megawatt floating solar power project in Kerala's West Kallada district to Messrs. Apollo Green Energy Limited on 26th of July 24. Further, the lease deed for transferring the water body or land was executed between NHPC and the concerned agency in Kerala, a company owned by Land Water Body Owners, on 7th of September 24. The cost of the project is rupees 260 crore and tariff of the project is rupees 3.04 per unit. The project is expected to be commissioned by February 26. NHPC has signed an MOU with the government of Rajasthan during the Rising Rajasthan Investor Meet on 30th of September 24 with an investment plan of rupees 50,000 crore. The MOU envisages development of pumped storage projects, renewable energy, solar, floating solar and wind power projects and battery energy storage system in the state of Rajasthan. NHPC is also exploring to develop pumped storage projects in the state of Andhra Pradesh, Odisha, Jharkhand, Madhya Pradesh, Chhattisgarh, Gujarat, Tripura, Punjab and Maharashtra. We have submitted pre-feasibility report of Indra Sagar Omkareshwar 640 megawatt, Tekba 2 800 megawatt and Satpura 2 1500 megawatt pumped storage scheme situated in Madhya Pradesh. Further, pre-feasibility report of Savitri pumped storage project 1800 megawatt, Kengadi PSP 600 megawatt situated in Maharashtra, Masinta PSP 1000 megawatt situated in Odisha and Kupa PSP 900 megawatt situated in Gujarat have also been submitted. For other projects, preparation of PFR is in process. The detailed project report for Savitri PSP is under preparation. This is all from our side. Now the forum is open for question and answer. Yes, sir. Now I will hand over the mic to our Director Finance, Sri R.P. Goyalji, for his address.
Good afternoon, friends. I am going to share with you detailed quarterly and half-yearly set of numbers with a detailed analysis. The analyst board has adopted half-yearly financial results for the period ended 30th September 24 in its meeting held on 7th November 24, and the same has already been communicated to exchanges. Brief highlights of the financial results and important updates from the company are as under. During half-year FY25, our power stations have achieved generation of 15,013 million units as against 16,797 million units generated in corresponding period of the previous year, which is lower by about 11% or 1,784 million units. During second quarter FY25, our power stations have achieved generation of 8,034 million units as against 9,010 million units generated in corresponding period of the previous year, which is lower by about 11% or 976 million units. Our PF for half year FY25 stands at 82.68% against the corresponding previous period PF of 91.93%, which is about 9% lower. Our PF for second quarter FY25 stands at 84.87% against the corresponding previous period PF of 89.78%, which is about 5% lower. For half year FY25, company has earned revenue from operations of rupees 4,969 crore as against rupees 5,056 crore in corresponding previous period, which is about 2% lower by rupees 87 crore. The decrease in revenue is mainly due to lower generation. During Q2 FY25, company has earned revenue from operation of rupees 2,551 crore as against 2,485 crore in the corresponding previous period, which is about 3% higher by rupees 66 crore. The increase in revenue is due to increase in sales pertaining to previous year by rupees 170 crore and unbilled revenue towards insurance and security expenses by rupees 169 crore, which is further offset by decrease in energy charges by rupees 190 crore and decrease due to reimbursement of water sales by rupees 85 crore. Other income for half year FY25 is of the order of rupees 739 crore in comparison to rupees 408 crore during the corresponding previous period, which is about 81% higher or by rupees 331 crore. This is mainly due to increase in realization of business interruption loss against insurance claim by rupees 155 crore, mainly related to Tista 5 power station. Further, there is increase in provision not required to pay by rupees 104 crore, which is mainly pertaining to reversal of provision in respect of expenditure incurred on Basar project to the tune of rupees 99 crore and increase in dividend income by rupees 54 crore. Other income for Q2 FY25 is of the order of rupees 370 crore in comparison to rupees 129 crore during the corresponding previous period, which is about 187% higher or rupees 241 crore. This is mainly due to realization of business interruption loss against insurance claim by rupees 138 crore pertaining to Tista 5 power station and increase in dividend income by rupees 67 crore. During half year FY25, the generation expenses have come down from rupees 915 crore to 595 crore, means by 320 crore, which is mainly due to non-creation of liability against water sales for the power stations located in the state of Himachal Pradesh, where the relevant act has been deemed unconstitutional by the Honorable High Court of Himachal Pradesh, and in the state of Sikkim, where management is of the opinion that obligation to pay water sales beyond what has already been paid is at best contingent in nature. During Q2 FY25, the generation expenses have come down from rupees 397 crore to 313 crore, means by rupees 84 crore, which is again mainly due to same reason I just mentioned. During half year FY25, the employee cost has gone up from rupees 619 crore to 629 crore, means by rupees 10 crore, which is almost flat. During Q2 FY25, the employee cost has come down from rupees 321 crore to rupees 318 crore, means by rupees 3 crore, which is almost flat. During half year FY25, there has been increase in the finance cost from rupees 245 crore to rupees 526 crore, means by rupees 281 crore, which is mainly due to increase in interest on arbitration/court cases of rupees 331 crore, which is further offset by decrease due to change in weighted average rate of interest by 15 crore and decrease due to repayment of loans by rupees 20 crore. As per CIC regulations 24-29, the applicable interest on arbitration and court cases has to be recorded from the beneficiaries after CRC order for which petitions are being filed. During Q2 FY25, there has been increase in the finance cost from rupees 126 crore to rupees 298 crore, means by rupees 172 crore, which is mainly due to increase in interest on arbitration and court cases of rupees 203 crore, which is further offset by decrease due to change in weighted average rate of interest by rupees 7 crore and decrease due to repayment of loans by rupees 9 crore. During half year FY25, the depreciation and amortization expenses same at the rupees 553 crore as against corresponding period of previous year. During Q2 FY25, the depreciation and amortization expenses have come down from rupees 277 crore to rupees 271 crore by rupees 6 crore, which is almost flat. During half year FY25, other expenses have gone up from rupees 709 crore to rupees 899 crore, means by rupees 190 crore. This is mainly due to increase in insurance expense by rupees 108 crore, increase in R&M expense by 30 crore, and increase in CSR expense by rupees 11 crore. As per CIC regulation 24-29, The applicable insurance expenses and security expenses are recoverable from beneficiaries after CRC order for which petition is being filed. During Q2 FY25, other expenses have gone up from rupees 344 crore to rupees 489 crore, means by rupees 145 crore, which is mainly due to the increase in insurance expenses by rupees 64 crore and increase in R&M expenses by rupees 18 crore. During half year FY25, tax expenses have gone up from negative rupees 30 crore to rupees 668 crore, means by rupees 698 crore. This is mainly due to the reason that during corresponding previous period, MAT credit of rupees 529 crore was recognized. During this period, no MAT credit has been recognized, whereas MAT credit of rupees 221 crore has been utilized. This has resulted in a negative impact of rupees 221 crore on the PAT of the company. During Q2 FY25, tax expenses have gone up from negative rupees 273 crore to rupees 360 crore, means by rupees 633 crore. This is mainly due to the reason that during corresponding previous year period, MAT credit of rupees 519 crore was recognized. During this period, no MAT credit has been recognized, whereas MAT credit of rupees 141 crore has been utilized. This has resulted in a negative impact of rupees 141 crore on the PAT of the company. During half year FY25, we have earned PAT of rupees 1,929 crore as against rupees 2,500 crore of corresponding previous period, which is down by rupees 571 crore or 23% approx. And the reasons for increase in the line items we have just discussed. During Q2 FY25, we have earned PAT of rupees 905 crore as against 1,447 crore of corresponding previous period, which is down by rupees 542 crore or 37% approx. And the reasons for increase in the line items we have just discussed. During after FY25, the incentive incentive on account of secondary energy and deviation charges were rupees 27 crore, which is equal to the amount in corresponding previous half period. This remains flat. During current Q2 of FY25, the incentive on account of secondary energy and division charges was to the tune of rupees 16 crore, which is again equal to the amount in the corresponding previous period. So there is no increase or decrease on account of these two incentives. The PF incentive for the quarter and half year is nil due to changing methodology for recognizing incentive income. The PF incentive shall be recognized once the capacity charges of a particular power station is fully recovered. Capex of rupees 4,812 crore has been incurred during half year FY25 against target capex of rupees 11,762 crore for the whole financial year 24-25 on consolidated basis. The company has paid final dividend at the rate of 5%, that is 50 paisa per equity share for the financial year 23-24 in the month of September 24, which is in addition to interim dividend at the rate of 14%, that is 1 rupee 40 paisa per equity share, resulting in total dividend at the rate of 19%, that is 1 rupee 90 paisa per equity share on the face value of paid up equity share of 10 each. Other major highlights of the company are as under. On realization front, NHPC has received rupees 4,588 crore from the beneficiary states against sale of energy during half year FY25 as compared to rupees 5,065 crore in the corresponding period of previous year. Trade receivables as on 30th September 24 stands at 4,266 crore as against 5,970 crore as on 30th September 23. This includes 2,812 crore as unbilled debtors as on 30th September 24 as against 2,685 crore as on 30th September 23. The net receivable out of total reported trade receivables as on 30th September 24 are reconciled as under. The reported trade receivables are rupees 4,266 crore, which includes unbilled 2,812 crore, unbilled debtors 2,812 crore. So, billed receivables works out to 1,454 crore. Out of that, 209 crore is on account of debtors dues converted into installments under electricity less payment surcharge rules. Balance net receivables are 1,245, which stands billed to the beneficiaries. And out of that, debtors more than 45 days are only 499 crore. So there is no issue on account of unbilled debtors outstanding receivables. Unbilled debtors mainly include impact of AFC billed and recoverable as per regulations 2019-24, including security expenses of rupees 756 crore, unbilled sales for the month of September 24, which is rupees 716 crore, impact of effective tax rate on return on equity of rupees 459 crore, and energy shortfall of rupees 376 crore. Net trade receivable as on 5th November 24 stands at rupees 870 crore, which includes more than 45 days debtors of rupees 118 crore only. This is all from my side. Now the forum is open for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to only use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ragini from Elara Capital. Please go ahead.
Yeah. I'm sorry.
Sorry for interrupting you. Your voice is not clear.
Now am I audible? Hello.
Yes, now it is clear.
So sir, what is the under recovery in Teesta hydro plant?
Yes, please. As you know, our Teesta 5 power station is down since October 23 due to flash flood in the Teesta basin. But our generation was, our business interruption loss is fully insured for 1 year period. So 1 year period has completed in September 24. So after September 24, we will not be getting any business interruption loss from insurance company. And whatever expenditure is being incurred, that will go to the profit and loss account. So you can say there is loss of revenue in the spot of Teesta 5.
Sorry, what is the amount you said? The loss? What's the loss amount?
Yeah, Rajni, so on annual basis, the total AFC of Teesta 5 is around 450 crores. And the recoverable amount from insurance companies 410 crores, out of which we have already recovered 250 crores so far. So if you consider at annual basis, the total loss on account of Teesta 5 without business interruption loss, BI loss claim would be around 450 crores. But since for 12 months in indemnity period, our insurance policy is there, so recoverable amount stands at 410 crores. So in a way, you can say that the under recovery is around 40 to 50 crore only.
Okay. And when will this plant begin operation?
As per our latest estimate, this plant will commence generation by December 25. Reason being, this plant suffered a second incident in August 24.
Okay. And sir, for the project for which the PPA exists, I mean, for which you have signed the power purchase agreement, is there an issue in signing the power supply agreement for the renewable project as a renewable energy implementation energy?
So hydro power systems are concerned, our power is totally tied up, and there is no issue of signing of PPA. But in case of renewable energy from solar or hybrid mode, wherever the solar power is in the range of 2 rupees 60 paisa, 65 paisa, there is no issue. But in case of some of the tenders in REI mode, we are facing prolonged signing PPA, but that there is no risk from NHPC side, because we are implementing these projects in REI mode only.
So, I mean, is there a risk of cancellation of PPA for such renewable projects?
No. Whatever PPA have been signed, they are being honored. But in case of future projects in REI mode, if tariff is in viable range, PPA will be certainly signed. But if tariff is high, certainly discounts may refuse to sign.
Okay, I will join that. Okay. Fine.
Thank you. Ladies and gentlemen, participants who wish to ask questions may press star and 1. The next question is from the line of Rupesh Sankhi from Elara Capital. Please go ahead, sir.
Yeah, good afternoon, sir. Sir, a couple of questions. Firstly, on regulated equity, what is the regulated equity we are expecting post commissioning of JV standalone projects by, let's say, in the next 3 to 4 years? And second question is, sir, we have significant capex ahead over next 7 to 8 years. So how are we placed in terms of cash flows to meet this equity capex contribution? That is the second question.
Yeah, okay. So since we have been discussing regarding this regulated equity, you are aware that currently the company is placed at the regulated equity level of almost 13,000 crores, right? Now going forward, we have capacity addition from Parvati to Subansiri, then Rangit Fort, and then couple of projects from our JV side, subsidiary side also. So if you look at the year-wise capacity addition and their resultant regulated equity, so I can share with you by end of FY25. After commissioning of Parvati 2, our regulated equity will be 16,500 crores from the current level of 13,000 crores, right? Then in FY26, after commissioning of Rangit Fort, the resultant regulated equity will be 17,000 crores. And by FY27, after commissioning of Subansiri, full commissioning of Subansiri rather, and Pakal Dul 1000 megawatt, the resultant regulated equity will be 25,365 crores. And by FY28, which is a major year from the commissioning perspective, we are going to commission 3 projects, Vista 6, 500, Kawar 540 and Ratra 850. So regulated equity will be 28,590 crores. So meaning thereby in next 4 years, our regulated equity is going to be more than doubled. So current level of 13,000 crore is going to be 28,500 crore,
Regarding your question about cash flow for incurring capex, our present debt equity ratio is in the range of 0.84 only. So there is no issue of cash flow. After commissioning of these ongoing projects, we will have sufficient internal accruals for increasing equity in the upcoming projects. And for raising debt, we have no issue because we are very under leverage.
Yeah, okay, sir. Thanks.
Thank you. The next question is from the line of Anuj Upadhyay from Investor Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sir, if you can share details on the secondary charges, UI and incentives for the quarter in comparison to the last year's corresponding quarter? That would be helpful. That would be my first question.
During this half year, we have earned secondarily to the tune of 3 crore as against corresponding previous period of 6 crore. And deviation charges we have earned rupees 24 crore in this half year as against 21 crore in the corresponding previous period. And for the quarter, the secondary energy is again 3 crore as against 6 crore in the corresponding previous period. Deviation charges are 13 crore as against 10 crore in the corresponding previous period. Any other details?
Okay, nothing on incentive, sir?
As I told, we have changed the system of recognizing PF incentive. PF incentive will be recognized after achieving the NAPAP. So, whatever the PF incentive will be, that will be recognized in the fourth quarter, majority in the fourth quarter.
Okay. And sir, it's a follow-up on the previous question where you are referring that the insurance cover is for the 1 year on the interruption for the CISA. So as against the 450 crores of fixed cost, we have recovered 410 crores and 40 crores is the roughly under recovery till September.
But 450 crores, we will be recovering 410 crores after absorbing 40 crores on account of excess crores. So out of 410 crores, yes. Out of 410 crore, we have already recognized 250 crore up to September quarter. And balance 160 crore will be recognized in coming period.
Got it, sir. But this insurance cover is only for the 1 year since the plant has gone for the outages. So sir, from here on, as you mentioned, the COD is expected for in December 25, that is say another 15 months from now. So is it fair to assume that for next 1 year and or the 15 months, your under recovery would cross closer to around 450-500 odd crores?
Yes, sir. You correctly understood.
And there is no cover for this?
Yes, sir. There is no cover. Because cover is limited to 1 year only.
Fair point, sir. This was helpful, sir. Thank you.
Thank you. Ladies and gentlemen, participants who wish to ask questions may press star and 1. The next question is from the line of Rupesh Sankhi from Elara Securities Private Limited. Please go ahead, sir.
Sir, one more question, sir. Can you just give us an update on Dibang project, sir? And an awarding of EPC tender for the Sawalkot and River.
For Dibang project, the works are, as I explained, the 5 contract packages out of the total 7 contract packages. So 5 packages have already been awarded, and the works are going well on the project site. We have established the permanent access, which is without interruption to the project site. So that is one, and the progress on the various underground structures, the diversion tunnel, these are going well. Presently, we are in the process of tendering the dam contract, and we are hopeful that by the another 2-3 months, we will be able to award the dam package. And thereafter, only one package will be left, hydromechanical. So that will take some time, and it is required to be awarded after few months. So no issue. So Dibang is going well, no problem. We are there. Any more questions?
Regarding this EPC tender for Sawalkot and Dugar?
So Sawalkot and Dugar, we have already floated tender for civil works, and it was likely the last date was 11th November. So just at the request of the few bidders, so we have extended the bid. Now we have recommended to extend the bid by another 3 weeks. And the Sawalkot, we are just in the process of floating the tender for infrastructure and diversion tunnel works, and also for the floating tender for the consultancy works. So consultancy works for design and drawings of the dam package.
Thank you. Thank you for that.
Thanks.
Thank you. The next question is from the line of Kushal from Antique Stock Broking. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, I joined the call a little late, so pardon for repetition. Can you share the adjusted PAT number for this quarter and the same period last year?
Yeah. So, in that adjusted PAT adjustment, you can just consider one item, which is, reversal of provision of bursar, which is around 104 crore. Apart from that, all other items are regular nature. So, accordingly, you can find out the adjusted PAT.
Mr. Kushal, our operating profit is comparable with last year. The dip is only on account of MAT credit, which we recognized last year and which is not available in the current year. Otherwise, our operating profit is just comparable with last year.
Okay. And then this 100 crore which you mentioned, this is for, from 905.
Yeah.
Yes, sorry, sir.
100 crore is on account of reversal of one provision which we created in past and which has been reversed during current year. Because it is recoverable from the Government of India.
Okay. So this is more like a prior period income booked in this quarter.
Yes. You can say. Yes, sir.
Okay. So to that extent, ideally from 905 crore, we should subtract this 100 crore to come to adjusted PAT. Is that fair understanding?
No, 905 crore does not consider this 100 crore. 100 crore was recognized in first quarter.
Oh, sorry. Okay. Got it, sir. Got it. And this other income increase that we see, so that is primarily the insurance claim is getting booked out here, or?
Yes, it is primarily on account of business interest flows in respect of FY 5 and dividend income, which is higher by 54 crore in current quarter.
Okay. And in the call, you did mention that, for this insurance claim, 250 crore is booked till now.
Yes.
So, which means the incremental to reaching 410 odd crore, which is almost like 160 odd crore. So, we'll be booking in the next, 12 months? Or, this?
160 crore will be booked in next 2 quarters. On the basis of certainty we received from insurance company. For 250 crore, we have already either amount have been received or we have received their acceptance. But for 160 crore, we have to receive the consent of the insurance company in coming period.
Right. And then this, you see, AFC is roughly 450 odd crores.
Yes.
But as far as expenses is concerned, say to the extent of, I can understand, there won't be any O&M since, project is not in operational. So what are the fixed charges that you need to incur? That probably has to be there for the next, let's say, December 25. So what are the fixed charges that you incur?
In our case, generally, it is fixed cost. Operational maintenance staff is there, which will remain there, and interest finance charges will be there, depreciation will be there. So 90% costs are in the nature of fixed costs, and it will be incurred in the coming period. There is no variable part as such in our case.
Okay. No. My question was more to do with because this AFC has ROE component, so I can understand there won't be any ROE. But there are certain fixed costs which you need to under recovery. Maybe interest you need to pay to the bank, some kind of depreciation accounting you will continue. So to that extent, I was trying to understand.
Mr. Kusal?
Yeah. Sir, one question. On this 450 crore, the AFC, what is the ROE? ROE component?
228 crores.
ROE is 228 crore.
Okay. Got it, sir. Got it. And then,
Annual expenditure in the range of 220 crore.
got it, sir. Got it. And then this Parvati 2, again, I think there is a quarter ka delay. That's fair to understand, right? Commissioning.
As per our plan, it was to be commissioned December 24, but Hydro has some challenges. That's why we are setting our goal post to February 25. And we are starting filling the reservoir, and we are testing gates, etc. of the reservoir dam, and all balance of activities are being completed, and it is very much hopeful that we will be commissioning this project in February 25.
Right, sir. Right. And then, what would be an ideal phasing of this 4 units? I mean, February, and then how?
All the units will be commissioned at a time, single stroke, because units have been tested, and these have been operated one by one with the available water. So, commissioning will happen in single stroke only.
Okay, sir. And then this, even for Subhansri Lower, the quarter 1 of FY27, so again, it is a one stroke, or it is a phasing will be there in this?
In respect of Subhansri, as per our plan, we will be commissioning 3 units by March 25, and rest 5 units will be commissioned in phased manner, and the complete project will be commissioned by May 26.
May 26.
Yes.
Okay. Got it, sir. Got it. But sir, okay. No, got it. Yeah, so that's all from my side, sir. Thank you very much.
Thank you. The next question is from the line of Nikhil from UTI Mutual Fund. Please go ahead.
Hi, sir. Thanks for the opportunity. So my first question is regarding the note 8. So we are basically booking the insurance claims, and then again we are expending them through the other expense. I don't understand why we are doing that.
Nikhil, it is accounting, as per accounting guidelines and accounting standards, the loss is to be moved under other expenses, and since these two activities are separate activities. Happening of loss is one activity, and recovering the insurance claim is the separate activity. So, recognize the claim on account of insurance is being shown under other income.
So, of the total AHC of around 450 crores, how much are we recovering through the insurance?
Out of 450 crore annual AHC, we are expecting to recover 410 crore after deducting excess clause.
Okay,
So,
40 crores.
So 40 crore will be under recovery. So out of 410 crore, we have already recognized 250 crore, and balance 160 crore will be recognized in the coming balance period of this financial year.
Understood. And so my second question is regarding, we were looking to monetize and securitize ROE for Zulhasti.
Yes.
So what exactly are we on track on that, and how much cash flow should we expect from that?
We have already completed this exercise, and we have realized 2,300 crore plus on account of this securitization.
2,300. For how many years have we securitized?
We have securitized for 8 years period, and the total amount which we have realized is 2,384 crore.
2,384. So the regulated equity for this plant will be somewhere around 1,500 odd crores, right?
No. In case of Zulhasti, regulated equity is 2,000 crore, 2,050 crore.
2,000 odd crores.
Yes.
Okay. Sir, and you touched upon this point earlier as well. For solar plants, you mentioned for tariffs somewhere around 2.6, you are getting the PPS. But even for the complex projects, the FDREs and the hybrid projects, the PPA signing, is it taking some time? Because from the presentation, I can see that a lot of them are not signed yet.
For FDRE, we are getting the tariff of 4.73 or 4.75.
Right.
and we are getting DISCOMs, the PPA are being signed. Only 1,200 megawatts was pending, so we are in discussion with the Uttar Pradesh DISCOM, and we are hopeful that within a short period we are going to sign the PPA remaining unsigned capacity.
So, sir, till date, as intermediary, how much capacity have we tendered out, and for how much have we signed the PPA, if you can give us?
Yeah. So, just I will give.
We have tendered around 9,000 megawatts capacity. Out of that, we have signed PPA or we have received consent for around 7,000 megawatts. For balance, we are in touch with the DISCOM, and we are hopeful to receive their consent. Otherwise, also there is no risk to NHPC because this is in the REI mode only.
Right.
We have no capacity in this.
Right. So, and we will be earning 7 paisa per unit after the
7 paisa fixed.
Sure. That's all from me. Thank you and all the best.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand over to Mr. Rupesh Sankhi for closing comment.
We thank NHPC management for giving us an opportunity to host this call, and we really appreciate for the detailed presentation there on the website. And we also thank all the investors and the analysts for joining this call.
Finish. Thank you. Thanks a lot, Rupesh.
Yeah, thank you.
Thank you.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.